Guys, if that music thing ever happens again where there's music playing on the stream but I can't hear it, please let me know because I literally won't be able to know if there's music playing because usually I listen to music before I hop on the stream. And so, yeah, if I, if there ends up being music playing, I'm literally not gonna know. But, I'm gonna make a video about this soon, but guys, I'll probably make a video about this in detail soon, but you really have to let go. You really have to let go to go on. And what I mean by that is, like, stop trying to feel like, you know, like trading is such a long journey, and you think every second you think that you deserve to be within an arm's length away, right? You feel like that. But the reality is, the more that you feel like you're within that arm's length away, the more you're gonna try to make things happen. And the hard trading's ironic because the harder you try, it's not like most other things. The harder you try in trading, it will cause you to do things that are not correct, like over trading and making emotional decisions versus other things. If you try harder, you end up usually working harder. But working harder in trading can also often lead to not making that decision. So what I'm trying to get at is just continue to show up every day, continue to do everything you need to do, but stop trying to feel like you have to have it right away, because that need for instant success or results, it's just going to slow you down and make you feel more like crap. So I'm gonna make a video about that soon. But anyway, guys, good morning, everyone. Hopefully you guys are all doing good. I got my other monitor working, so that's kind of cool. I need to... Hey, what up, Snowman? Good morning. So I need to set up... I switched the cords for the monitors, so I need to set it up correctly. Let me do that real quick. So this is now my right. Okay, I need to switch these. Left. And now this is right. Well, I guess I gotta make it like this. Okay, once again, guys, since my monitor's been having issues, I had to switch out the cords, and so now my left is my right and my right is my left for my displays. So that's why I'm doing this. But yeah, there we go. That's fixed. So, alright. Okay, so let's just start out with, well, that's the wrong button. Let's start out with news. Let's see what news, if there's any news today. Now, probably not because it's a Monday, but... Alright, so home sales. Pending home sales at 10 a.m. Orange folder. Probably is not going to matter a ton, but let's go ahead and screenshot that, put it in the... forget what it's called. Let's put it in the news today section. So, and then yeah, let's just start doing analysis, see what we got going on, and then do the best we can today. Yeah, just like always. So, well, first of all, we had this daily gap, and the past 2 days, honestly, guys, this should have been super obvious that we were respecting this gap based off of how these daily candles closed. So that's my own... that's a skill issue on my part. Like, I should have definitely seen that we were probably going to hold this gap, because look at how these candles hold this gap. You know what I'm saying? With high probability, we can expect the next day to expand the opposite direction. So I already started taking some notes this morning. Here, actually, I'm gonna switch back and forth like that. So I started taking some notes. Basically, this could be a IRL to ERL thing where we have that daily gap. So then we could drop down in time frame. We have a 4-hour gap down here. So if we rebalance to equilibrium, that'd be kind of far down. I don't know if we'll do that. Alright, 1 hour. On the 1 hour, we are in this 1 hour gap here. So yeah, just going top down, just kind of looking at what we have. Guess it's also a 4-hour gap. And let's see, are we getting SMT here? We are, right? We're getting SMT. This is with Wednesday of last week. But once again, I think this is a more likely than not a buy model. So, okay. So what could we do? We could frame this buy model a little better. This is the manipulation leg. We visited the sniper model entry. Now we're at the second standard deviation. So drawn liquidity, right? Drawn liquidity is previous week's high, which is also all-time highs. Looks like we have a 1 hour gap. Market's bias is bullish. We have a 1 hour gap here. So 1 hour gap. So maybe we just hop in on a 5-minute CSD retest here. It depends. If there's SMT, then maybe, yeah. Right? 1 hour for buy gap. Relatively simple. Once again, guys, I'm at the point where you just gotta take trades, accept risk, and then journal. And I'm at the point where I'm not gonna be emotional after losses. I'm not gonna be upset. I'm just gonna say, was it a good trade? Okay, cool. I'm done. I'm not upset. I'm not angry. I tried my best, and I'm not gonna, be emotional after whether it's a loss or a win, because I'm trying my best. If I take a loss, it's a loss. It's fine, It's like, that's just me trying my best. There's nothing else I can do. So 1 hour gap, 5-minute change in state. So if we did revisit this could be nice. Once again, market definitely bullish, expanding to all-time highs. So drawn liquidity, these highs. So we got accumulation. I kind of wanted to see SMT there, but I'm not seeing it. YM is equal lows. Yeah, this could be definitely accumulation, manipulation, distribution. I don't know, I don't know why there's not SMT here, but Then again, it kind of looks like S&P broke structure to the downside. Same with now that I'm looking at it, same with NQ, right? So could it be possible it could be a little lower? Yeah, but once again, higher time frame is bullish. So okay, let's just think here. So right now we are forming this SMT. I'm not trying to jump into anything, you know? I'm trying to be thoughtful. We might just want to wait to react to price and let the market come to us. We do have a 5-minute gap here. So 30-second change in state might deliver us lower, right? We have 5-minute gap. SMT with this high. Alright, I'm liking this, honestly. So, oh, you can't even see my screen. So, I'm probably going to get my accounts pulled up. So let's go ahead and do that. But yeah, I'm going to stop being upset about losses and just realize, hey, I'm trying my best and I don't control the outcome. I just control, did I try my best? And that's all I can control. Okay. I'm trying to get the password. I don't know why. I thought I put in the right password. I guess not. There it is. Okay. Oh, wait. That makes sense. Okay, I'm getting everything pulled up. Okay, putting this on the right hand side of the screen, putting this on the left hand side of the screen. Okay, there we go. So here, I'll show you what I'm doing. I got both of them pulled up, and then now I'm gonna get my personal on my phone. And then yeah, whenever I do take a trade, guys, I'm just gonna be like, yeah, I tried my best. Whatever is the outcome, I don't care. I'm trying, you know? I'm trying. I'll be okay with whatever. So, anyway. Let's go back to the other screen. So, we've broken through this. So yeah, I'm just gonna wait for something obvious. That's just all you gotta do with trading, honestly. And I have a pretty good idea of how to take trades on my personal now. I can just do market buy and then market sell for 1 micro to enter and then exit, and that makes it very, very simple. So let's make sure that the copy trading is set up. Yep, it is. Okay. All right. Well, yeah. So we had that inversion for value gap. That was kind of nice. So yeah, draw on liquidity, all-time highs, IRL to ERL from that daily gap. So yeah, I do think we'll be drawing up to all-time highs. It's looking like that second standard deviation of this, you know, it's being we're going through it is what I'm trying to say. We're going through it. Maybe we retrace here, but it's kind of looking like it's continuing. Then again, could we reverse here? It's possible. Actually, yeah, it's definitely possible, right? Because we have 90-minute SMT. Now, I really don't like being bearish against the trend, but hey, what up, Fishy? Like, obviously, I think the draw on liquidity is all-time highs, but I'm just keeping an open mind for everything. Okay. So yeah, I don't know. I feel like it's honestly, I feel like it's more bullish than bearish. So yeah, this seems like it would be a 2022 model to the upside is what I'm trying to get at, right? Where we have a fair value gap, and I think the market's probably going to keep expanding up. Once again, very simple 1 hour gap here, and then 5-minute change in state. And honestly, guys, we could just take that and just say, you know what, let's just accept the risk. Let's take it, and let's see what happens, you know? 1 hour for value gap, 5-minute change in state, literally just, and then a 5-minute gap here. Get what I'm saying? Like, we could theoretically just put a limit order at this 5-minute change in state. And then just play the continuation card, except the only thing is I don't know if we're gonna come back there. So yeah, we're just gonna watch price, honestly, guys. We're not gonna try and force anything. We're just gonna watch price. If a setup comes to us, then cool, you know. But right now, I'm not seeing anything, so we're just gonna keep waiting. And then we had this 15-minute inversion for value gap here. That was nice. Very simple trade from this close to the external high. That was a nice 15-minute inversion. Do you do this as your job? I'm working on it. It's the goal. It's the long-term goal. So, okay. Let's see. We could also frame this as a 15-minute fair value gap and then a 1-minute model. This might even be better. Like I said, I'm working on it, bro. I had gotten payouts. I had gotten funded. Right now, trying to stay consistent. So, man, this was clean. Why all the good trades happen before I get on the charts? Doesn't matter. Apparently, it doesn't matter how early I get on the charts. I'll still miss trades. But yeah, this is where it really comes down to patience, honestly, guys. Like, see how obvious this was, right? Obviously, we had a 15-minute fair value gap. Obviously, we had a 1-minute change in state. But are you able to wait for this? Are you able to wait for this? Because obviously, this is stupidly obvious, and I think anyone could take this trade. At least anyone that follows me and my content could take this trade. But the issue is, will you be on the charts at the right time? Will you be patient? Will you be waiting for it to happen? And then will you execute exactly when you're supposed to? And I think that is the hard part of trading, guys. It's not that, oh, we don't know what we're doing. It's just that it takes so much patience and waiting, and it's boring, and yeah, it's not like we don't know how to trade. It's just like anyone who knows who learns about the stuff I teach could take this. What up, Javier? Good morning. And this was a 2022 model as well, right? 15-minute fair value gap, 1-minute change in state. Clearly, you can enter. Honestly, guys, this would have been So yeah, guys, trading, so much of trading is just doing nothing, being patient, waiting, and then when the time is right, you just enter, and that's it. That's really it. It's so much easier said than done. So yeah, let's put this in 15-minute, 1-minute models. Obviously, we're continuing higher right now. So we're at that 4th standard deviation. So really clean trade here. Part of me, honestly, guys, part of me wants to be like, eventually when I get on my own, part of me wants to like stream price action for the entire day. I know that's crazy and excessive, but I don't know, guys. Like, when I get good enough at trading, I feel like, why not? And if I'm actually making real money from trading, then why not, But it's like, yeah. So yeah, you can clearly see 15-minute fair value gap accumulation. And then a 1-minute 2022 gap, right? In discount. Makes sense, right? We had both of these models overlap with each other, which is usually what happens. The 2022 model and the flow state model overlap with each other almost all the time. I think maybe all the time, actually. Makes sense. And then, yeah, 4th standard deviation. Got hit. So let's go ahead and put this in the 15-minute, 1-minute models. Oh, let's mark out this was manipulation, and then this was inducement. So yeah, we're at that max extension. So could we get a retrace? Very possibly. Okay. So accumulation, manipulation, inducement. You see it? You see how it's all fractalized and markets within markets? Or models within models? So far, this 369 stuff, guys, I've been looking at, or I'm not necessarily looking at, but it's kind of cool. Like, how could we know that this was a high probability inducement? Well, we need to do the 369 stuff. So, basically, you take 805, right? and you turn it into a digital root, meaning you break it down into a single number. So 8 plus 5 is 12, and then you add up all the digits of 12. 1 plus 2 is 3. So if it's a 3, 6, or 9, it's a higher probability entry, right? So this is, you would know it's with a higher probability that this would be, hopefully that makes sense. It's kind of hard to explain, but yeah, that this would be a inducement. So right now it's looking like we're gonna go lower because we got that change in state. Maybe we need to look for an entry, but I'm honestly gonna be a little bit cautious here. Let's go ahead and put this in models for, yeah, for 15 minute, 1 minute. But yeah, you can clearly see that that was the case there. So now, pushing back lower because we did hit that max extension. Honestly, guys, I could still see us continuing higher because higher time frame, right? Higher time frame, daily gap. This is trading 101. We go from fair value gaps to highs and lows. IRL to ERL. Makes sense? Within a trend. IRL to ERL. So what am I looking for? I'm looking for fair value gaps on the lower time frame. Well, we have one right here. 1 hour fair value gap. Bang. So then we could enter on this 5 minute change in state, which is also fair value gap partition, right? You see that fair value gap within the gold block fair value gap partition. So this is a 5 minute gold block fair value gap. So we could definitely take this as a 2022 model. Honestly, guys, let's just do it. Let's just do it. Let's enter at that. Let's enter at that wick. Let's just put a limit order there. What do you guys think? Is that a good trade or not? Kind of depends. Like maybe we want to wait for a lower time frame change and stay off of it. It's a 5 minute gap. We could definitely wait and wait for an aligned time frame change and stay off of it. You know, we don't need to just randomly induce the low, right? We could definitely wait. There's no point in needing to enter right away. So 1 hour gap and then a 5 minute gap. Yeah, I like that idea, guys. Let's wait for this 5 minute gap to hit. And then we'd probably go for continuation. We're 7:30. Oh wow, 7:30 is all the way down there. So we're probably not gonna go down there. Okay, let's just be patient, right? Alright, I'm gonna go to the bathroom. But yeah, this is kind of what I'm seeing. This is a 5 minute gold block for value gap right here. Now, then again, maybe this 5 minute gap's gonna hold. Yo, what up, NF? How's it going, bro? Alright, guys, I'm gonna go on a bathroom break. I'll be right back. But basically, for those who are just now getting here, right? Higher time frame. We have a daily gap. We have a external high at all-time highs. So daily gap, all-time high, right? Internal range liquidity to external range liquidity. So we drop down time frames. Okay, right? We have a 1 hour gap. And basically same thing. The 1 hour gap supporting price higher, I think eventually will draw up to the external high. So with that in mind, going into the market long bias. The only thing is, I don't know. I don't know where we're gonna enter. We'll just have to figure it out. Okay, I'll be right back. But yeah, what I honestly want to see, guys. Okay, perfect. This is actually really, really good for us because I would love it if we come down to this 5-minute gap, and then this in and of itself is maybe you can consider this 2022 model, right? Because we have that 5-minute fair value gap. Here's equilibrium. So this in and of itself could be an entry. I was thinking about just entering there, but we don't have S&T. That's one thing to know, which I don't like. I don't like that double psych. We don't have S&T. Yeah, we don't have S&T, which is not something I'm a big fan of. We have bearish S&T. That's something I do not like, is we don't have bullish S&T, we got bearish S&T. And it's actually a 90-minute S&T. So, right? So this might actually fail, right? We just got a sweep of this high with 90-minute S&T. So 620 and 850. This is 100% a 90-minute S&T. Objectively, this is 90-minute S&T. We're above our true opens. Okay, I actually might take a short. So on the 1 minute, we broke structure. Okay, actually, yeah, 90-minute SMT, 90-minute sweep. Okay, let's see if this fits inside of the gold block partition. Once again, guys, let's just, I'm being thoughtful, being analytical, don't need to do anything if I don't want to. Minute. Once again, I want to see this be at the high of the dealing range. Sick. You can see this is at the high. We did get this sweep at the high. We created a fair value gap. Yup, this is a good fair value gap, guys. You see Friday trades, yo? No. What happened? What's Friday's trade? Okay, we broke structure. I'm liking this fair value gap here. Yo, guys, let's lock in. This fair value gap looking clean, right? We also had another bearish SMT here. We're going into the macro as well. Where's equilibrium of the displacement? Okay, 8. So if I did 8 cons, that would be 8 times 4 is 32 on top step if I did take this. And then on apex, 8 times 12 is 96. I'm actually probably going to take this if we get it because I like it. Fits in with everything. And then, yeah, I'll take it on personal as well. So yeah, basically 90-minute SMT, 90-minute sweep, obvious A, M, and then now possibly D. So yeah, honestly, we could just put a limit order there at equilibrium. $24,895.5. Hey, what up, Kirk? Let's actually get some more. Let's get some more information. I think it's important to get more information. I'm liking this a lot, but I want to see, are we in a higher time frame PD array? Like, what else do we got going on? We're in a 1 hour rejection block with SMT, right? Partial previous week's high SMT within this 1 hour rejection block. We just actually tapped consequent encroachment of the rejection block too. So higher time frame Phoenix model, right? Okay, I'm really liking this a lot. I'm gonna just put the limit order right there at 24,895.5. I don't care what happens, guys, because guess what? I'm trying my best. But yeah, it's a super high time frame Phoenix model. So yeah, and if it's lost, then I'll just be like, okay, because I tried my best. But I'm liking this displacement. I'm liking that we have equal lows. So if this happens, what time would we like this to happen at? We would like this to happen at let's see, 9:12, because then that'd be a digital root of 3. So we want to see this happen at 9:12. You sign up for Zusi, bro. I'm liking the 369 digital root stuff. I think it's actually very useful. So yeah, if this happens at 9:12, that's an additional confluence, because digital root of 9:12, what's that? 9:12. So 9 plus 1 plus 2, that's 12. 1 plus 2 is 3. So if it happens at 9:12, be additional confluence for us. It's basically just an additional confluence. So we're expanding lower already. We did not get filled. So I'm going to keep that limit order there. I'm not changing it. Let's put a limit order on Top Step as well. So 24,895. Okay, same limit order on both. So guys, you might be wondering, what is this trade? Let's go over the trade real quick. So logic for this trade, right? 90-minute SMT, 90-minute sweep. So liquidity sweep, break of structure, very, very nice displacement. And at equilibrium, this is a 2022 model, right? If we, when we tap equilibrium, you deleted it. If we tap equilibrium of this, that's going to be equilibrium, hopefully a sniper entry on the 2022 model. On the higher time frame, this dark box right here, this is a 1 hour rejection block. We have SMT with this 1 hour rejection block, so it's a higher time frame Phoenix model as well. So let me show you that real quick, right? 1 hour Phoenix model, where we have this 1 hour rejection block right now. You can see S&P is making a higher high above that rejection block. NASDAQ pushing into that rejection block, and most likely I think we tapped consequent encroachment of the rejection block. Yeah, look at that. Perfect tap of consequent encroachment of this 1 hour rejection block with SMT. So if Phoenix model on the 1 hour is the hold, I'm expecting this 2022 model to hold, which is, why I'm willing to take the risk on this trade. Once again, if it's a loss, I tried my best, and I'm not even going to be upset, guys. I'm not even going to be upset because I'm trying my best. That's what matters, guys. And I don't have control over the outcome. I have control over the setup. I try my best. Yeah. Another thing we can do is 1 minute change in state, right? So we could project, let's see, we could project out, honestly guys, let's project out this order block. This order block might be in the order block partition, right? Yeah, you can see the order block. Yeah, I'm cool with whatever, guys. I'm cool with whatever. This order block is in the order block partition very nicely. We swept out the liquidity into the high of the dealing range once again very nicely. So I'm going to project out this order block. I'm actually going to go from the high of that green candle, from the body to the high. And then I think we'll go to the 7th. So I might just target the 7th, honestly, guys. I'll probably scale out, though. I'll definitely scale out. But that's going to be the low of the dealing range, is the 7th standard deviation. So now, will I get filled? I don't know, right? At this point, I don't know. 4th standard deviation will also be a nice target here. So yeah, I'm gonna put that limit. I have that limit order at equilibrium. I'm cool with whatever happens. Got the limit order set. Oh yeah, let's go back over to the other screen. So yeah, just to show you guys, limit orders are set. I'm ready to just accept risk and take a trade, man. And from an AMD point of view, you guys might be wondering, where's the AMD? Because as always, we gotta frame our trades within AMD. Accumulation, manipulation, and then maybe distribution, right? See it? Accumulation, manipulation, and then maybe distribution. Once again, guys, you just gotta I'm not gonna be upset if it's a loss. I'm just going to just accept it. And I think that's growth for me as a trader, is just saying I'm going to take trades, not care whether what the outcome is. And honestly, guys, I think this one's good enough where I'd even consider taking it again if it was a loss. So. But yeah, like I said, no control over the outcome, just trying my best. And what do we have? We have 8. Dude, we could do 1 off at each standard deviation since we're doing 8 cons. Let's do it. Let's do it. That's fire. This is a Jake trade. This is gonna be fire, guys. And we'll take 2 off at the 7th instead of the 8th. Guys, this is gonna be hype, okay? We're gonna take 1 off at each standard deviation. So we're gonna enter 8. Yeah, I was looking at that. So I'm gonna do 1 off at each standard deviation of the order block, all the way down to 8 standard deviations. So TP1, TP2, TP3, TP4, TP5, TP6, TP7. Actually, I'm going to do both off at TP7, and then that'll be it. So yeah, this is a Jake Trades original, right? No one else does that. It's just me. I'm not going break even. I'm just going to take profit, scale out at each of those. Because I have conviction in the 90-minute SMT. And if it's a loss, then it's a loss. Whew. All right. So once again, guys, here's how it's gonna go. Let's actually scroll my other screen again real quick, and let's get rid of the gold block range. Even though it's helpful, we don't need it right now, right? Right now, I'm just showing. Okay, here's the order block. I'm gonna take profit at 1 at every standard deviation. So, bang, and I'm not gonna go break even. I'm just gonna hold it. And yeah, I'm just gonna. This is just this is my style. Jake Trades it style. You know what I'm saying? 1 off at each standard deviation. No break even. Actually, we measured this out badly. Because I want this 4th. Why isn't the 4th standard deviation where it is supposed to be? Okay. So 1, 2, 3, 4. Once again, guys, you kind of just have, in trading, you kind of just have to let go to go on. And I'm going to make a video about this later today or sometime later. But you guys you just have to stop stressing about, whatever happens. Like, I can't control it. I just have to try my best. And if my best isn't good enough, then I'll try again tomorrow. You know what I'm saying? And then if my best isn't good enough again, I'll try again tomorrow. And I'll keep taking my best trade that I can every single day. You know what I'm saying? And I know these markets are algorithmic, so... So yeah, 1, 2, 3, 4. This is how I'm going to do this, right? But yeah, we might not get filled. Who knows? And yeah, guys, like I said earlier, I'm not gonna be upset if it's a loss. I'm growing as a trader. I'm realizing I really can't control anything. All I can control is taking a trade that I like, and that's it. So if it's a loss, then I'll just accept it. You could even go on the lower time frame, and you could get a low time frame change and state off of it. So yeah, equilibrium not tapped yet. Let's just get rid of everything real quick. I'm just going to keep doing more analysis because we have extra time now, right? We have extra time. So once again, we have SMT with this high of September 24th. And then once again, we talked about this rejection block, how we tapped consequent encroachment of it. We're rejecting consequent encroachment. Let's see if we can find more information. We got event horizon up there. We did not tap that yet. So is this SMT with a... It's partial SMT with previous week's high. And then once I get filled, I'm just going to show my screen the whole time because I don't care. I don't care. I'm at the point in my trading, guys, where I just want to be so transparent and not really give a crap. So, once again, here, let's pull everything back. Consequent encroachment of the 1 hour rejection block. We have SMT with September 24th high. So partial previous week's high SMT. So 1 hour rejection block. You know, one possibility is you could take this as a 1 hour. So 1 hour, maybe a 5 minute change in state off of this, right? Because it's a 1 hour rejection block. So when we get 5 minute change in state, which I'm not liking that look of it, but maybe you could consider this change in state. Is there a 6 hour SMT, right? And then I'll probably go break even at the second. You know what? I'll probably go break even here. Break even like that. We will see if we get filled or not. I don't really care. Once again, try my best. That's what matters, right? So far, no fill. I'm motionless. I'm motionless. I don't care, right? I do not care. We got a volume imbalance. Yo, Kirk! Bro, we got a volume imbalance above this. We got a volume imbalance above the gap. Above the 5 minute 2022 gap. Kirk, we got vulture model, bro. Kirk, we got vulture model. So guys, this volume imbalance, it's above the 2022 gap. This is likely to be incredibly sensitive if it comes back up here. And so on personal, right? So vulture model, exactly. We got vulture model, Kirk. So if we do come back up to that volume imbalance, expect it to be sensitive. Will we come up there? I don't know. We might push up. So bias is playing out right now. 2022 model is playing out right now. We had a limit order for a slightly higher. We did not get filled. Now the market's moving lower. It looks like market open in 2 minutes. All TPs are getting hit. We just didn't get filled. But we are trying our best. So I don't like that we already hit max extension of the lower time. Yeah, I don't like that. Yes, we could have entered on 5-minute change in state there, because it would have been a 1 hour, 5-minute model. Yes, we could have entered on this 5-minute 2022 gap. There's a million other ways we could have entered. We should have just entered on that 5-minute 2022 gap. Dang it, bro. Yeah, man, we messed up. We should have entered on this 5-minute 2022 gap with stop loss above the vulture gap. Okay. So I'm gonna get rid of the limit orders now because I don't know, at this point we've already ran the liquidity we wanted to hit. Market just opened. So yeah, I'm gonna get rid of the limit orders, guys, and then if we do take a trade, it needs to be a reevaluated type of trade. Then again, we have 15. Okay, wait. 15-minute change in state. We remember we had that 1 hour. Was it 1 hour rejection block? We have the 5-minute change in state. We kept equal lows. Okay, so I'm just gonna keep looking around and try and be thoughtful here. I did get rid of those limit orders. I still think it's bearish. We tapped consequent encroachment of that 1 hour rejection block. This is the hard part about trading. You gotta stay completely emotionless. When you're right and you don't get an entry, you gotta stay completely emotionless. You know what I'm saying? But look at Phoenix model, guys. You see Phoenix model tap consequent encroachment perfectly. So since we had a 1 hour rejection block, this 5-minute change in state, right? We have a 5-minute change in state here, and we have an old high resting above that change in state. So this could definitely be Phoenix model, right? We could honestly, guys, let's enter right at that old high. When we touch the body of that top of that old high, we should enter as an inducement, and then stop loss above the body here because this vulture gap should hold price. And then for my personal account trade, I'm gonna enter at the vulture gap. So 5-minute bearish change in state. We left equal lows. 1 hour rejection block. with higher time frame SMT, with lower time frame SMT. I'm going to enter as an inducement of this high. So this is going to be so instead of 8, I'll do 7. Instead of 8, I'll do 7. And then so 84 instead of 96. And then 28 instead of 32. And I could look for lower time frame change in state off of it. I'm not going to. So let me show you my other screen so you guys can see what I'm doing. All right. I'm gonna put sell limit order right here. Sell limit order. Same spot, 24893. For that much. And I'm going to be okay with whatever happens. And then on personal, I'm going to enter at the vulture gap. Or if we get a reaction right away. Or I could just enter on personal right there. We'll just have to see. On personal, I might just wait for us to get change instead of delivery off of it. Okay, so 5-minute change of state of delivery rejected price. I think we should still induce this high. But maybe we won't. Maybe we won't. You can see markets rejecting that 5-minute change in state. Markets rejecting that 5-minute change. We could have entered at that change in state, right? We could have entered at that change in state. I'm choosing to enter as an inducement. Maybe we don't get it. Maybe we do, right? I'm just going to enter as an inducement. Your entry's at 9:30? 9:30? I don't think we're going to go above the rejection block. I'm entering as an inducement of this high. I'm going to enter personal at the vulture gap. And yeah, that's it. Simple as that. Entering personal at the vulture gap. Inducing this high on personal. And then I'll still use standard deviations of the initial order block to do the rest of everything. To do the take profits. So it's cool because this vulture gap is right at that 1-minute order block. Okay, so orders we're still getting filled. We could just enter at that change in state. It's actually looking like it's rejecting price right now. Once again, I want to see that high get induced. Will we induce it? I don't know. But if we do induce it, I like it. I like it a lot. So what time would we want to see this happen? Let's see. So maybe right before the macro, but also I'm trying to do the 369 calculations. 9:45 could be a time. All right, let's see. We'll see. Let me get out. All right, we'll see. We'll see. For personal, I'm gonna wait for the vulture gap to get hit, or I'm gonna wait for 15-second change of state out of it. All right, all right. We got so close to getting filled. No way. I didn't get filled. I didn't get filled yet. No way. Come on. All right, guys. I have to be less emotional here because this, like I said, this is a trade where I'm just accepting the risk. I can't control the outcome. I just take it. I'm not gonna be upset if it's a loss. I just have to take trades. Be okay with whatever. So, dude, there's no way. If I don't get filled, that's crazy, bro. Okay, we're still not filled yet. I mean, I'm still not. Maybe you guys got filled. If you take it, I'm not suggesting take my trades with me, with me, right? Take trades based off of your own back testing and your own conviction. All right. Okay, completely emotionless if we induce this high. All right. And then take profits will be each standard deviation of the order block down to 7 of the of this 1 minute order block. That's what I'm gonna do. Of this one. Alright, we'll see what happens, guys. We might not get filled. Honestly, guys, I should just leave, bro. There's no point. There's no point. My trade's already set. So, I could just leave. Then again, I'm gonna be prepared. Okay, what time is this? 9:36 or not? Yeah, 9:40. Okay, completely motionless. I don't care what happens. I don't care. I don't care. Like, once again, growth as a trader is going to come from me just not caring. So, what time is it? So 6. So I want to see it probably happen at 9:42 because that would mean it would be 6 plus 9, 15 would be 6, or maybe 9:45 would be better because that'd be either 9:42 or 9:45. That's what I want to see it. Either one of those. Alright, is this 942? Yeah, this could be it. Once again, I'm gonna enter the vulture gap on personal. Alright, whatever happens is whatever happens. Filled. Here we go.
Order filled.
Order filled.
Order filled.
Alright, whatever. Alright, I'm done for the day. Once again, growth as a trader is coming from taking trades I like, accepting the risk, and then being okay with what happens. So. Okay, I'm gonna go on a 2-minute walk, guys. I got stopped out on all the counts. Whatever. Okay. I'm going on a 2-minute walk. I'm just checking to make sure we have I have the I got stopped out. Checking. Let's see. Where does it show my P&L? You can tell I'm growing as a trader because I just don't care. I don't care that I got stopped out. I just accept it. How do I check? I'll just check it on my phone, guys. I'll check it on my phone. Alright, guys. Yeah, 2-minute walk. Here we go. Let's close out this. Close out this. And yeah, 2-minute walk. And you guys can watch the charts right here. There you go. like I said, guys, growth as a trader comes from not caring. You know, I'm okay with it. I'm okay with it. One thing I will say is it became a lot lower probability once we came all the way down, right? Once we came, sorry guys, I didn't mean to flash you with my belly, but it became a lot lower probability once we came all the way down, hit that target that we talked about, that fourth standard deviation, and then came all the way back up. All of a sudden, then it became a lot lower probability because we already ran most of the liquidity, right? We already ran sell side at that point. You get what I'm saying? Look at this. Look what I'm trying to get at, right? It became a lot lower probability. What was your high time frame bearish perspective? Okay, so the trade that we liked, that we took, actually did play out, right? This ended up being 3-1. We had our entry a little bit higher. We didn't get filled. And when we came back up at this point, guys, it became a lot lower probability because we already ran sell side. You get what I'm saying, right? We already ran sell side, and now we swept out the low, and now we're coming back up. At this point, guys, we probably should have just said, okay, we missed the trade, right? This was the trade. We missed it. We should have just said that we missed it, and that would have been it. We wouldn't have had to take a loss. That's a very valuable lesson. Once again, the inducement, like I said, this is a good inducement if, for instance, we'd only came down to like here, right? And then we pop up to the high and we hadn't hit sell side yet, right? This would be a good inducement. The issue is we already hit essentially max extension. We already hit max extension. Look at this. If I measure this order block, we already hit that 4 to 5 max extension of this model, taking out this low, which was our drawn liquidity. So at this point, this is no longer inducement. This is just being offside. Lesson learned, guys. Lesson learned. I'm not upset. Guys. This is just a part of the process. We get better. We learn. Guys, you have to realize being a trader, it's a constant learning experience. I don't care how long this takes. I'm going to be here every single day. Feel free to fade me every day if you guys want, guys. That's probably going to be profitable. But what I'm saying is I'm not going to be upset. I'm not going to care. I'm not going to give up. Because, once again, this trade was right until we ran sell side, and then at that point it wasn't. And you can see if we entered at an inducement of this high, then actually we would have been a sniper entry. You see what I'm saying? The initial inducement of this high was a sniper entry, right? But now this is no longer inducement because we already took out the low. We were just offside. Probably. What are you saying? I'll show you the reason for my high time frame bearish bias. So we had this 1 hour rejection block. You can see that we actually perfectly tapped consequent encroachment. I wasn't necessarily bearish bias. In the moment, though, I really liked this 2022 model to sell side, right? We had break of structure, right? Very nice displacement. We had a fair value gap right here. You can see we ended up inducing this high into it, and we ended up delivering lower off of it. But once we hit this low, at this point, we needed to say, okay, the model's done. Because now, if we come back up, this ain't going to be inducement anymore. This ain't going to be inducement anymore. This is just going to be a different model back to the upside. It would still be inducement if we hadn't came and ran sell side. But we did come run sell side. Right? So I don't regret the trade. But did I learn something? Yes. Yes, I did. Right? We induced the high into the 2022 gap. Delivered a sell side. At this point, our draw on liquidity's hit. I'm not going to be going for sell side anymore. I'm going to be ready for buy side. And yes, Gary, I do think market's bias was bullish. If you look at the higher time frame, we had that daily gap. And You know, the market had obviously been respecting it. And then, you know, IRL to ERL, very common sense stuff. And then we had this 1 hour gap. And so, very clear lesson learned, right? We dipped lower, but it was going to be only temporary before we ended up continuing higher because higher time frame was bullish. Lesson learned. 1 hour for value gap is also that 15-minute gap. Remember this original 15-minute gap? This original 15-minute gap from however long ago, it got reclaimed, right? Reclaimed once, reclaimed again. 15-minute gap got reclaimed twice, and then we expand off of it. So yeah, guys, I might take a little bit longer of a break because, you know, we were offside. I mean, I was offside. I messed up. It is what it is. 1 minute change instead delivery off of this was fire, guys. 1 minute change instead delivery off of this was fire. Right? You can see how when we get this boom, up close candle, it's like, yeah, then we expand. So yeah, lesson learned, guys. We tried. We messed up. We learned a lesson. We got to be more careful. If the market takes the draw on liquidity to basically say our trade's invalid now. Makes sense. So, yeah, I'm not upset. I'm chill. But yeah, offside. And once again, guys, it's okay. However long trading takes, it's fine. I don't care. I accept it. That's the only way. It's the only way to, you know, be a profitable trader. So, what I am considering though, guys, is I'm considering making different accounts for different sessions. So like, I have a disciplined way to accountably trade different sessions and, you know, give myself more than one trade a day. But I would have to trade a different session or something. Or I might have different accounts for New York first trade, New York second trade, or something like that. But I need to set them up into separate accounts so that way the daily loss limits kind of do the job of being my stop loss. Actually, I should still set the stop loss, but the daily loss limits are back up. You know what I'm saying? Accumulation, manipulation, 1 minute change in state. What S&T with the S? Are you looking at this S&T? Yeah, so I'm not bearish anymore. I think we basically got that idea got invalidated once we expanded through. I think we'll draw back up to all-time highs. So, all right, yeah, this is where we'll journal, and we'll be okay with whatever or we'll be okay. We're okay with it. Like I'm okay with it. I'm not upset. I'm just here. I'm just ready to keep going. Orange folder in 2 minutes. Nice, bro. Nice. But yeah, we're gonna journal. Like notice the difference between my losses before and my losses now. Like I just feel, I don't know, I'm just very much more just like accepting. Like I don't know how long it's gonna take for me to be consistent, but I'm gonna keep showing up. So let's go. 7 watching. But we'll keep analyzing charts. I might just lay down for a bit, guys, because, you know, obviously it's kind of stressful to enter a trade and stuff, so. Alright. I'm gonna just chill out for a bit, and then I'll come back to the charts after I've kind of, like, rested up, and then we'll keep analyzing, so. Alright, guys. I'm back. So, the key, guys. The key, honestly, to simplify your trading, I'm going to just say it, and no one else is probably going to agree with me, but if you want to make sure you're on side, it's almost always safer to enter on a change state delivery close instead of a retest. And the reason I say that is because if you enter on a change state delivery close, once you get A, M, D, it's like an inversion for value gap. You're not usually going to be offside. You know what I'm saying? If you enter on the close, you don't have to worry about this kind of thing where we were going to enter on an inducement, but we'd already taken out sell side, right? If you the nice thing about entering on a change state delivery close is you never really have to worry about that. And so I know most people actually say, oh, enter on the retest. It's better to enter on a retest. Actually, guys, entering on a close might actually be better most of the time. It might. It might actually. Something to keep in mind is that I actually kind of prefer entering on a change state delivery close instead of a retest. Accumulation, manipulation of the high, distribution, and then guess what happens? Accumulation, this whole thing becomes accumulation. Manipulate the low, and now it's distribution. What does this remind you guys of? What does this remind you guys of? Boom, 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 right? Accumulation, manipulation, it's my logo, for those who are wondering, right? We accumulate, manipulate, distribute. Now this AMD, this old manipulation all becomes accumulation, and now we get AMD back to the upside. You know what I'm saying? Just AMD cycles within AMD cycles. That's all these markets are. So, what's going on now? We are S&P is doing something here. You're gonna short again? I have to be done for the day. Unfortunately, right? But had I had a chance to redo today, I would have probably tried to stick with this bullish bias idea that I initially had. Either that, or I would have gotten in on that earlier entry to make sure we got in. But either way, if I'd done either on the earlier entry for the short, or we needed to get rid of this idea once we take sell side here, and then now be open-minded to taking it long at this 1 minute change to delivery close. Also, this 1 minute change to delivery close here for a short is nice as well. And we hit 4 to 5 max extension. Okay. So, I'm not bearish, dude. I think IRL to ERL, look at the higher time frame, right? Daily for value gap. Looks like we're expanding up from this daily for value gap to all-time highs, right? And now we just had AMD to the upside within this. So Let's see. I don't know right now. We're just watching price. And all of a sudden, after trading, I get so tired. Because it's exhausting, bro. It's exhausting. Let me know if you guys took anything and what you took. If you did take anything, let me know. But yeah, daily for value gap to ERL right now. So very possibly this is a 5-minute gap. Now we're getting 30-second change in state. You know what I'm saying? We'll probably expand here. Off of this breaker. So then again, maybe we don't. We'll see. This is not a normal trade I would take because I don't know. I don't like to chase like this and then take a lower time frame trade that chases price action. But holy, maybe it's not a bad idea to be chasing, dude. Yeah, so now target all-time highs. Or just take profit. So yeah, 5-minute for value gap, 30-second change in state. And then AMD, right? And then the reason you'd enter on this, right? The reason you guys might be wondering, well, why didn't you enter on this? Well, one, we already tested it, but then also you can enter on the wick of the breaker. So I entered on the wick of the breaker like that. And then you can see how that was a perfect entry. So yeah. So for standard deviations, like let's say we're doing take profits. You can measure this out like this. And then do one at each of these. But yeah, like I said, like let's say you took this trade, TP at each standard deviation, all the way up to 7, and then I would do 2 at 7. That's just what I would do. That's just how I prefer to trade. Honestly, guys, maybe my preferred style is gonna be. I actually think my style might be. I no. Here's my style, guys. This is my style. I just now thought of this. I think fourth and seventh are the most sensitive. So I'm gonna do two off at 4 and two off at 7, and then nothing at 1. Nothing at 1. Because I don't know. There's what's the point in doing profit at 1? So this is my textbook signature right here. This is gonna be in the Jake Trades It textbook. This is how I like to do it. Where basically so 1 1 2 1 1 2 like that. That's how we do it. And then no break even. So what I'm thinking is like, let's say I had 8 cons. 1 1 1 1 2. I think this is gonna be my standard procedure. So Jake Trades It standard procedure. Possible. Oh my gosh, why do I get so tired? Like, randomly. Alright. Yeah, I might take another break, guys. I don't know why. I just got so tired recently. So, I'm just gonna chill. I'll watch Price on my phone. Yo, real quick, guys. It's possible this is an AMD day. I don't know who's watching, but it's possible this is an AMD day. And why do I say that? Because actually, I don't know about AMD day, but this okay. Looking at this, now that I'm thinking about it, it's definitely not AMD day. Sorry, I take that totally back because Asia and London will need to consolidate. Sorry, I take it back. Because I was looking at just this and I thought, oh, AMD, but nah, I wouldn't. This 30-second inversion is probably going to work. The way we popped off the low. So this 30-second inversion is probably going to work. If this closes. Because we popped off the low. Pretty obvious AMD here. And we even have SMT with YM. So this is probably going to work. Alright, this is going to work. This is really nice. So, yeah. Inversion for value gaps, man. Oh, yo, Kirk's watching. Let's go. So we'll see if this tape read hits or not. Target. I target like there. Yep. Wow, what a surprise. You could even take out the take profit and trail your stop now if you really wanted to, and you probably make double. What a surprise, bro. What a surprise. I'd take profit at that high, though. Bro, Dodgy's going to be freaking out, bro. Alright, whatever, bro. That TP just got smacked. Bro, like I always say, guys. It's not a big deal. It's just it's a journey. It's a long journey. Inversions for value gaps, they're good, bro. Inversions for value gaps are good. Anyone hating on them, they don't know what they're talking about. But they're also not the only way to trade, right? That's also a myth. Oh, but yeah. And then also, you could always target further, but that's a solid place to take profit, so. Alright, back to laying down because I'm tired, bro. I always get so tired after I take the real trade. It's every single time. You took shorts on YM? Nice, bro. Alright, guys. So, there's about 12 minutes left of live trading window. Yeah, this is... this is about, as interesting as it gets. Yeah. If you can't tell, I'm just being super sarcastic, because this is not really that tradable. Now, maybe there was a Phoenix model here. Actually, it looks like there was. But it's definitely not an obvious one, right? I mean, definitely not something that... I actually don't even know if there was, now that I'm looking at it again. Yeah. So, I wouldn't take it. Anyway, guys, nothing obvious. Let's just go ahead and journal the trade for today, just to get it in the journal. And yeah, so and then I'll be done for the day. What the? Alright, let's look at the trade. So the trade I took was higher time frame PD Ray was a rejection block, right? We had a 1 hour rejection block, that, but in hindsight, market was bullish. Well, I knew it was bullish, but still, I thought maybe we could deliver off of this. So there's that rejection block. And you can see how perfectly we react off of consequent encroachment. And so, that obviously looks really, really nice. Higher time frame, we have SMT with previous week's high, or at least not with previous week's high, but with a high from the previous week. We're above both of our true opens. Oh, but we sweep 730. That's something I missed. Yeah, that I have to be more thoughtful of that, because dang. Let's start by putting that in the notes. Important to be very careful to remember, or to know when a trade is valid and when the initial draw on liquidity has been ran. Careful when you are entering on a limit order, because if it runs without you and takes a draw on liquidity and returns, you need to be ready to and recognize, is the initial trade invalid or not? In this case, originally the short was valid, but we didn't get filled. We ran our draw on liquidity, and then the market swept 730 into a reclaimed 15-minute fair value gap and then reversed, and all of a sudden now our limit order to enter was offside. This is a very important lesson for the future. If something like this happens again, where the market runs far without you, then returns to your limit order, just know that depending on the context, it may be likely that you are now offside. Makes sense? See what I'm saying, right? We had the initial idea was that, we had a AMD with this high accumulation, and then 90-minute sweep, right? And guys, I will be posting this on Twitter. From now on, I'm going to post everything on Twitter, always. Then we have 90-minute SMT here. So yeah, here's the issue, right? The draw on liquidity for the initial AMD was now taken. So here's what I mean. Yo, what up, Hyper? I'm just drilling the trade that I took. So what happened is we had 90-minute SMT, very nice AMD, and I had a limit order right here. We came up, we never got filled, came all the way down, and at this point I have to get rid of the limit order. And because at this point we now swept 730, we had swept out the low. Now at this point we were offside, and I thought that we could still be onside, but that was an incorrect idea. And so lesson learned, like, you got to be very careful when the market leaves without you. You can't just expect it to continue in that same direction if you missed it. So, but I thought maybe that it would, but the key is that we swept out 730, so it's a lot less likely. Look at how perfectly we tap consequent encroachment of this 1 hour rejection block. Accumulation, manipulation. Let's make this look good for Twitter, so that way, we show, hey, like, we are trying our best, not being stupid. Nah, it's okay, bro. This is just all learning process. I don't care, bro. I do not care. I don't care one bit. So 90-minute sweep, 90-minute SMT, higher time frame, previous week's high SMT, partial. That's why there's the percent signs. So and then break of structure. Well, there's one right here, but there's also another one right here. I had this one marked out. It's actually, once again, I just honestly, a lot of time, I just like to make it look nice. So that way people, like, it doesn't have to be like the exact representation of the trade. Or it does have to be the exact representation of the trade, but I want to make it look clean so people understand like actually what I was looking at, right? We had displacement leg lower. Obviously this was the draw on liquidity, right? From a dealing range perspective, if I open up Goldbach, you can see we swept liquidity into the high of the dealing range. So this is a 81 high, the fair value gap within the fair value gap partition. You took the pre-market buy model 750. Oh my gosh, yeah, I was looking at that, bro. That was clean as heck. Well done. Well done. So there's 81 dealing range high. So you'll note this order block was in the order block partition. That's why I like the order block. Rejection block. We had a liquidity sweep into liquidity sweep partition. We have the high of the dealing range. We deliver down, take our draw on liquidity, and then we reverse, right? I had to be able to say, hey, objectively now, I'm offside. And I didn't do that, right? So whose fault is that? That's mine. So let's get rid of this now. Yeah, sweep liquidity into the high of the dealing range. We could actually mark this out over here. Oh my gosh. Turn off all alarms. Dude, that made me jump. Alright. So 90-minute sweep, 90-minute SMT, and then we had a let's actually put it on this side. We had a order block, liquidity sweep, order block, fair value gap, and the fair value gap partition, right? So I was looking at possible entry within this fair value gap. And when we take our draw on liquidity, we got to be able to essentially say, okay, that initial idea is now incorrect. You know what I'm saying? So look at this Phoenix model, breaker structure, equilibrium. So my initial entry, my entry was at equilibrium here, right? I'm trying to become a goat. I'm a goat. I'm a baby goat. I'm a baby goat in learning. So you can see that we were trying to induce this high. It's a 2022 Goldbach for value gap on the 1 minute. We were trying to induce this high. We thought we were going to get an inducement of this high. And the inducement was only right there. This was only at the IOFED entry. You see that? There was no secondary inducement. By the time we came back up, we'd already had a reversal. Billy, oh my, bro, what? So yeah, IOFED right here, right? See what I'm saying? So we never tap equilibrium. So there's a lot to learn from this. Let's go ahead and post this on Twitter. And yes, I'm posting every single trade I take on Twitter from now on. So there's the high of our dealing range. RTH? It's a good question. So this is, by the way, guys, this is what I mean when I say that I've noticed that we don't need to tap, what's it called? We don't need to tap equilibrium for a 2022 model to be valid. This is what, and this is the perfect trade to prove that idea, right? This is the perfect trade to prove that idea because we do not tap equilibrium, yet this is still inducement, right? And an IOFED. So accumulation, manipulation, break of structure. How can we make this look a little nicer? Honestly, this is pretty... honestly, this looks nice here. And then... into that Phoenix model, consequent encroachment, right? Okay, so we're going to show how we were expecting us to retrace to equilibrium, and at the time we entered equilibrium, we were very much offside. Makes sense? You know what I'm saying? The market had already taken its draw on liquidity, and we were offside. So this was no longer a valid trade. So this is going to be how I'm going to screenshot it. Once again, guys, I could include all the TPs and whatnot, but I'm trying to just make it look clean so people understand the trade. So, and because on Twitter, you can't like perfectly draw everything out always. So, just trying to get the idea across. So, 81 high. So you can see the idea was correct, but late, right? This we already hit the draw on liquidity. This was no longer a valid entry. Check charts now. Oh yeah, we're definitely getting some movement. I need to finish journaling this though, and then after we can maybe look at the charts. So yeah, 943. Oh, another. This is very A very good observation. This is a very good observation. Macro delivered us lower. By the time we come back up, this ain't the macro no more. This ain't the macro no more. But originally at 920, when we get this inducement, 920, that was the Hydra macro. So that is a very valuable insight, right? So let's make a new folder for Monday. 9-29-25 Monday. And then this was 942 2022 model of 1 minute. So save that. Okay, Billy the Goat. Oh my. So pay attention to this, guys. This is a very valuable insight. When do we induce this high? 920. We hit our draw on liquidity. Macro done. 920, 930 this was normally it's 920 to 940. The macro for this case was 920 to 930. You see what I'm saying? So we induced the high. Hopefully that makes sense, right? From when we induce the high to our draw on liquidity, that's what I would consider the macro. 920. Normally it's 920 to 940, but we hit that draw on liquidity. And you know why? You know why that was all we needed to go down to? You know why? Because 730 got swept. So you see what I'm saying? So we're outside of this Hydra macro. 730 gets swept here. And the draw on liquidity gets hit. So now we're officially offside. We didn't do anything about it. That's on us. You know what I'm saying? I mean, that's on me. Okay. So you see what I'm saying, right? We were on side until we weren't. The market will do this type of thing where it'll say, yeah, you're on side. Yeah, oh, wait. Sorry, now the draw on liquidity is higher now. And you got to be able to flip it. You got to be able to be like, okay, was 730 swept? Okay, 730 was swept. All right, well, all right, let's learn from that. So let's continue journaling this. What else was I going to say about it? Also, the correct inducement happened right at 9:20, right when the Hydra macro started, and then delivered us to our draw on liquidity. When I entered, it was 9:41 and there was no macro at all. Makes sense? We delivered to the draw on liquidity below 730 during the Hydra macro. from 920 to 931. Hit at 931. And at that point, price reversed. All right. So, yeah, 941, 942. And this was a 2022 model. Actually, it wasn't just any 2022 model. It was a 2022 Goldbach model as well with sequential SMT. So a lot of things going for this model, right? We just messed up the entry. We could call this Enigma, or we can call this 2022. I'll just call it 2022. And then, yeah. L. On average, so the final TP was going to be probably, I think final TP was going to be like 7 or 6 to 1. Yeah, final TP was going to be 7. 7. And then average TP was probably like 3. Post-trade approval. Yes, but would I take it again? No, because I messed up the timing. And then, okay, do we get the screenshot? We're almost done, guys. And I'm trying to make sure I do this every single day. Okay, let's add this on Twitter. Oh, we also need to put this in Reflect IQ. Alright, let's do that first. Let's see. I appreciate it, Kirk. So yeah, I'll just consider this just like a regular 2022 model. You could call it Enigma if you want, because it was aligning the Goldbach partition. I'm just going to call it 2022. Win. No, definitely not a win. Putting the link here. Yeah. Let's put our notes that we took there. And, yeah, just, moving on. So, every single day we get a little better. A little better. entered. The correct entry was at 9:20 at the IOFED inducement. By the time we came back up, the draw had already been hit. Drawn liquidity been hit. 7:30 was swept, and the new draw on liquidity was higher. Next time I will be more careful to not enter to here, I don't know. I think it's fine to just to leave it like that. Next time I need to here, I'll just leave it like this. Yeah, this is fine. Alright, guys. That's going to be it for this stream. Took a loss. Lesson learned. Like I said, we had to get that IOFED entry right away. And you can see that in this specific case, we do not need to tap equilibrium for this 2022 model to still be a really good 2022 model. So lesson learned, right? Sometimes equilibrium will not be tapped and the 2022 model will still work. Makes sense? Something we need to remember for the future, right? Sometimes 2022 models don't need to go to equilibrium, especially if they're paired with time like it was here in the Hydra Macro. So lesson learned, guys, and let's mark that out in the journal. Also, one last thing to point out is this is the perfect example of how 2022 models sometimes do not need to go to equilibrium to be valid, especially when they are paired with time and have an inducement like we had here. Just a note for future reference. Alright, guys. Is midnight the draw? It's a great question. Starting out 7:30 is the draw for sure, but we'll see what happens after that. I don't know. I'll have to look at it later, but I think I'm gonna end the stream here, guys. Lesson learned. We're gonna keep moving forward, and yeah. Let's see. Is there anything else? I think we posted on Reflect IQ. We posted in my spreadsheet. I think it looks good. Yeah, I think we're fine. So, and I posted on Twitter. All right, guys. Thank you so much for watching, and we'll keep going. See you guys